Have you ever felt like you're missing out on something huge? Something that's happening right under your nose, but no one is talking about? Well, get ready, because today we're pulling back the curtain on one of the biggest financial shifts of our generation. The very institutions that once called Bitcoin a scam, a bubble, a fraud, are now quietly, but aggressively, moving in. That's right. We're talking about banks, and they are pushing Bitcoin in ways you might not even realize. Let's rewind a bit. Remember just a few years ago? Mainstream financial news was filled with skepticism. Big-name bank CEOs were publicly dismissing crypto. They warned us it was too volatile, too risky, not a real asset. But here's the thing about big institutions. Watch what they do, not what they say. While they were telling the public to stay away, their best minds were busy figuring out how to get a piece of the action. The first major sign was the launch of Bitcoin ETFs, or exchange-traded funds. This was a game changer. Suddenly, buying Bitcoin wasn't some complex process involving crypto exchanges and digital wallets. It became as simple as buying a stock through a regular brokerage account. And who are the biggest players behind these ETFs? Giants like BlackRock and Fidelity. These aren't just banks, they're the largest asset managers in the world, handling trillions of dollars for pension funds, endowments, and millions of everyday investors. When BlackRock, which manages more money than the entire economy of most countries, decides to offer a Bitcoin product, it's not just a casual experiment, it's a massive stamp of approval. They spent years and millions of dollars working with regulators to make this happen. Why? Because their wealthiest clients were demanding it. The rich, the corporations, the family offices, they all saw the potential of Bitcoin as a store of value, a digital gold, and they wanted a safe, regulated way to get exposure. The banks and financial firms saw an opportunity they couldn't ignore. They could charge fees on these ETFs, create new financial products around them, and most importantly, keep their clients' money within their own ecosystem. Instead of you taking your money out of your bank account to buy crypto on an external exchange, they now offer you a way to do it right from your investment portfolio. It's a brilliant business move. They capture the fees, they manage the assets, and they control the narrative. But it doesn't stop with ETFs. This is where it gets even more interesting. Major banks are now building the infrastructure to support the entire crypto economy. Think about custody services. For a huge pension fund to invest billions in Bitcoin, they can't just keep it on a USB stick. They need ultra-secure, insured, and regulated storage solutions. Who's providing these services? Banks like BNY Mellon, the oldest bank in America, and State Street. They are becoming the digital vaults for the 21st century. They are essentially doing for Bitcoin what they've done for gold and stocks for centuries, providing the trust and security that large-scale institutional money requires. This isn't just about offering a product to retail investors. It's about building the foundational plumbing for the entire digital asset space. And it goes deeper still. Banks are also getting involved in crypto trading desks, research departments, and even venture capital arms that invest in promising new crypto startups. JP Morgan, whose CEO Jamie Dimon famously criticized Bitcoin for years, now has a dedicated digital assets unit called Onyx. They re-exploring blockchain technology for everything from tokenizing traditional assets like real estate to speeding up international payments. They're not just buying and selling Bitcoin. They're actively building the future of finance on top of its underlying technology. This is a complete 180 from their public stance just a few years ago. The question is, why the sudden change of heart? The answer is simple: survival and profit. Banks realized that they couldn't stop the crypto revolution, so they decided to join it and, if possible, lead it. They saw a tidal wave of capital and innovation happening outside their walls, and they knew that if they didn't adapt, they would become obsolete. The old financial system is slow, expensive, and riddled with intermediaries. Blockchain technology offers a way to make it faster, cheaper, and more efficient. Think about sending money across borders. A traditional wire transfer can take days and involve hefty fees. With certain cryptocurrencies or stablecoins, that same transaction can happen in minutes for a fraction of the cost. Banks know this. They're not just adopting Bitcoin. They're researching how to use this technology to overhaul their own outdated systems. So what does this mean for you, the average person who's just trying to make sense of it all? First, it signals that Bitcoin and digital assets are here to stay. When the world's most powerful financial institutions are pouring billions into an asset class, it's no longer a niche hobby for tech enthusiasts. It's becoming a legitimate part of the global financial system. The risk of Bitcoin going to zero, as some critics claimed, diminishes significantly when it's being held by the biggest players on Wall Street. Second, it means access is becoming easier and safer than ever before. You no longer need to be a tech expert to participate. You can now get exposure to Bitcoin through your retirement account, your brokerage app, or your financial advisor. The barriers to entry are crumbling. But there's also a crucial warning here. As the banks move in, they bring their own rules and their own motives. They want to package, financialize, and control the asset. This is great for mainstream adoption, but it also goes against some of the original ideals of Bitcoin decentralization, self-custody, and freedom from intermediaries. The mantra in the crypto world has always been not your keys, not your coins. This means if you don't hold the private keys to your Bitcoin in your own wallet, you don't truly own it. When you buy a Bitcoin ETF, you're not buying Bitcoin itself. You're buying a share in a fund that holds Bitcoin. You're trusting BlackRock or Fidelity to hold it for you. You can't send it to anyone, you can't use it to buy things, and you can't hold it in your own custody. This is the great trade-off. The banks are offering convenience and perceived safety in exchange for control. For many people, that's a trade they're willing to make. But it's essential to understand what you're giving up. The true power of Bitcoin lies in its ability to be a sovereign financial asset, one that no bank or government can freeze or seize if you hold it correctly. So, as you see more and more headlines about banks embracing crypto, pay attention. Understand that this is a deliberate, strategic push. They are making it incredibly easy for you to buy their Bitcoin products. They are integrating it into the systems you already use and trust. They're doing this because it's an enormous business opportunity for them. The takeaway here isn't that banks are evil or that you should avoid their products. The takeaway is to be aware. Understand the game that's being played. The institutions have arrived, and they are shaping the future of this asset class. Whether you choose to participate through their new, easy-to-use products or stick to the original ethos of self-custody, the fact is, the financial world is changing forever. The banks aren't just dipping their toes in the water anymore. They're building the entire swimming pool. And while the mainstream news might not be shouting it from the rooftops, the silent, steady flow of institutional money into Bitcoin is the loudest signal you could ask for. The next time you see a commercial for a Bitcoin ETF or read a report from a major bank on digital assets, remember this? They're not just watching the revolution, they're actively trying to lead it. And you're now one of the few who's paying attention. Thanks so much for watching. If this opened your eyes to what's really happening behind the scenes, make sure to hit that like button and subscribe for more content that cuts through the noise. Let me know your thoughts in the comments below. See you in the next video.